All right, good morning, everyone. It's Ben Ramirez on the Ramirez team. We have our credit department head, Ellen Cooper, here today. As I told you guys before, it's a huge part of what we do at Sunstreet, having the in-house credit department. I just looked at our numbers for last year, and we helped 27 families for $6,048,000 in sales. So that's a huge number that normally we wouldn't have had happen. So we have Ellen here today just to tell you about how the process works, explain credit, and really educate you guys on what they do. And again, it's something that I've tried to do in the past on my own, and it's just too much. You really have to be full-time into this and guide people through the process. So I'm going to bring Ellen up here and let her tell you guys about everything, and there'll be questions at the end as well. So thank you guys so much. Here's Ellen.
Hello, everybody. So I'm doing very good. How are you? Good. So Ben told you his numbers. For our company, we actually ended up helping 418 people that could not have qualified in any other way, for a total of over $96 million. So we're a big part of Sunstreet mortgage origination. I want to start off by telling you a little bit about myself and how I learned what we do today and how we're able to offer it effectively with our borrowers. So I was a mortgage loan originator for over 25 years. And during that time, I owned my own mortgage broker shop. In 2008, those of you that have been in the industry a long time know that broker world went away. And so I ended up having to buy into a mortgage bank, and I owned the franchise for Arizona. We did that very successfully for a long time. But in 2008, there was a shift that happened. And I realized, dang, I have to learn to be a professional. This is somebody that's been in the industry for years and years and years, because people would come in and I would hear so many sad stories from people that were losing their home, they'd lost their jobs, they couldn't sell their house, they had to move, they couldn't refinance their house, and they couldn't afford the payment, they had a ton of equity. Loan product went away in 2008. And all of a sudden, all of us that had been in the industry had to relearn everything that was out there, because there was nothing for people with bad credit. So I went from a staff of 29 employees, most of those were loan officers that worked for me, to this many almost overnight. And I sat there day in and day out and thought, I'm gonna have to go to work for Walmart. Now in my brain, because I think I've got to be the best employee I'm gonna be wherever I'm at, I'm like, well, I will be the best dang employee Walmart has, and I will do good at Walmart. But I have to tell you, I was a little bit stressed because I really loved my job as a loan originator. And so I finally went, I have nothing better to do. So I started bugging all of the MGIC underwriters. I started bugging all of our underwriters, and I learned everything I could about credit. Not just understanding what a credit score is and how it applies to loans, but understanding where are the gray areas. Not because I wanted to do things wrong, but there are exceptions in lending. If this is the case, then you can do it. But if this is the case, you cannot. So I started educating myself on when can a person with these characteristics actually qualify. That's not necessarily black and white, because I wanted to learn the exceptions that were out there. I guess exceptions is a better word than the gray areas. But as I went through and I started doing that, I discovered the very same thing that I loved about lending, which was figuring out how to get somebody to fit into this box that's called loan rules. And when they don't fit in this box, is there another box that maybe there's an exception to that they could fit into with these same characteristics? And so I started learning product guideline. I started learning credit guidelines, and I started understanding how underwriters look at loans. Now, this is after almost 20 years in the business. And I finally started learning those things. And as I learned them, it became a lot of fun. 2008 was my biggest year to date as far as loans closed, even though everybody else was going through major ick. 2009, I doubled my income. 2010, I almost doubled it again. And we've never looked back because we learned what we could do and how to actually get it done. So it became a really big thing to me. Credit is huge. Do you guys know that 7 out of 10 of the people that you send to a lender will not qualify? Those are natural facts. So 70, I don't think you guys do it Realty One. Do you guys pay your own advertising? Most real estate agents do.
Yeah.
70% of your advertising money, there's a garbage can back there, just throw it away. They're not going to qualify. That's really the way you could look at it. So it's like, okay, if 70% of people don't qualify, that gives me a much bigger pond that I can go fishing in. People that I can help. And so we started going, okay, everybody can do the standard vanilla. Everybody can. We all have the same loan products, guys. We all do conventional, USDA, FHA, VA. We all have the same box of rules that you have to follow. Now you have some underwriters that are a little more lenient than other underwriters. You also have something that's called lender overlay. So let's call this the FHA box of loan rules. You have to have a minimum credit score. You have to have this much in asset reserves. You got to be on the job for this long, whatever. Well, then in addition to that, there's another layer on top of that box that's put on by the individual lender that you're going through. Sunstreet Mortgage has one lender overlay. That is, you have to have a minimum of a 620 credit score. But we can help with that. So when you look at it, the reason that you make the rules you make is this is an area that's problematic for us, the lender. So like in 2008, a really good example, one day I get a loan or an email from Bank of America, and it says effective today, we will no longer accept any loans that have a disputed account on it. Why? Okay, well, let's put on the lender headset and let's think about it. Well, the reason that they have a problem with it is because, when you dispute an account, it is actually completely taken out of your FICO score algorithm. So that negative account, because that's the only reason you dispute it, right, is when it's negative. That negative account is now taken out of any consideration in your credit score. Well, us lenders all figured that out. Dispute. Voila, we have a good credit score that actually qualifies. Bank of America says we're getting a lot of loan buybacks and a lot of loans that are defaulted because you guys are disputing everything that's out there. So effective today, anything in our pipeline, no matter where it's at, we're not going to accept it if there's a dispute. Well, about 3 weeks later, Wells Fargo says, us too. Well, those are two of my major lenders, so there can't be any disputes. Now you have to remove all the disputes. And when you remove them, the scores tank because now those bad accounts are taken into consideration again. Does that make sense? And so then about a month after that, Fannie Mae, who is for all intents and purposes loan god, and I don't mean that disrespectful to God, but just they make all the rules and every loan is going to be sold off. And so you have to meet Fannie Mae guidelines. Fannie Mae comes out and goes, hey, we don't care who you're selling that loan to. We're not going to buy it if there is a dispute on that account. So now loan rules say, got to remove disputes. They've actually loosened up a little bit. There are a few exceptions, and we use those exceptions when we need to not remove a dispute because it's going to cause a score to go further down. Then probably a couple months later, authorized users became a big deal. Why would authorized user accounts become a big deal? Whose credit's qualifying you for the loan, mom's or yours? We don't care how mom pays her bills. We want to know, how do you pay your bills? Because we're qualifying you with your credit. So it used to be that as lenders, we would say, go get put on an authorized user account for somebody that's had an account for a long time and it's in good standing. Well, that's all great. But when you get to the lender, they have to remove it from your credit report because we don't care about mom's credit. Now, there are exceptions, like if you've got a significant other that's going on the loan with you, or if it's a spouse that's going on the loan with you. Actually, in the case of a spouse, even if they're not going on the loan, that authorized user account can be there. So as you look at credit, one thing that I really noticed, nobody understands it. You know, until about 15 years ago, you weren't even allowed to have a copy of your own credit report. It's a big secret how it works because they're afraid that we're going to manipulate it. Credit scores, I can tell you, are very easy to manipulate. But when you look at all of this stuff that you see on television that hurts people, it's a lack of information that is out there. So knowledge is power. And the first thing that I want you guys to understand as we're talking about credit today is that credit is completely illogical. When I was a mortgage originator, I'd be sitting at the desk and somebody would come sit next to me. Almost always the first thing that I would ask from the beginning of time is, how's your credit? And when I would ask them that, people would say, oh, my credit's great. I just paid off all my collections. As a loan officer, you have a oh crap moment. You're like, oh, they just killed their credit. You would think that if you pay off a collection, that you'd have better credit. And that's what the general population thinks. I don't have any bad credit outstanding, so now my credit's good. No, now you just have paid bad credit. In order to have good credit, you have to use credit wisely and you have to establish good credit. So how do you do that? It's really not that hard. So if 7 out of 10 people do not qualify for a loan, if credit is really, really hard to fix, how is it that we turn 42% of our customers that are sent to us back to the loan officer within an average of 48 days? We're not doing credit repair. I have to tell you, I hate credit repair. Does everybody understand the difference between credit repair and credit education? Nope. Credit repair says, oh, you got bad stuff on your credit? Don't worry about it. We're going to dispute it all. And we're going to start playing hardball with your creditor. So Ben is now Capital One. And we call Ben and we say, Ben, the Fair Credit Reporting Act says that if I dispute this account because there's something wrong on it, you have to remove it from my credit report. Ben says, okay, there's nothing wrong on it. But the Fair Credit Reporting Act says you have to go investigate it, Ben, and you have 30 days to get it investigated and to get it fixed, or it must be removed from the credit report. Sounds great. Except for Ben goes, wait, there's nothing wrong on here. He really was late. So it goes back to them. Well, then they send it back again and they go, no, there's errors on it. And Ben's being the one that's stuck having to waste all of his employees' payroll time to figure out what the error is. Maybe there should have been, maybe the account name was missing. It didn't print on the report. Maybe there was a misspelling. Maybe they have the wrong address on the file for the customer. Anything that's wrong on that report, it has to be removed. So credit repair companies play the odds that eventually Ben is accidentally going to go to 31 days before he responds, and thus it has to be removed. What the credit repair companies do not tell the customer is that on the 32nd day, Ben can correct it and put it right back on the credit report. And it's still showing the late, and so their credit scores are going to go right back down. But what consumers see is day one, when all those disputes hit, what did I say happens? They're all taken out of the credit score algorithm. So their scores go up. And they think, oh my gosh, credit repair is wonderful. They're fixing my credit. I'm ready to go to loan. Except for loan rules say what? You have to remove all the disputes. And then it's all going to tank again. There is not, guys, as much as we all want to hear it, there is not a fast fix as far as an instantaneous thing. But what we do actually gets them fixed faster than credit repair. It depends on what your customer is like. So we used to have a party in power that felt, and I'm not talking politics, okay, just so you guys don't get worried, I'm not going there. There is a party in power that says everybody deserves a house. In theory, that's correct. Everybody deserves the same equal opportunity to own a home. But if your credit report tells a story that says, Nick, you have never paid a bill on time in your life, and it doesn't appear that you intend to do that anytime soon, do you want to lend him $200,000? You don't know Nick. You don't know he's a nice guy. The answer is no. All that a loan company has to determine whether or not a person is qualified is their credit report. So what do we do with the credit report that happens really fast? You see the commercials on TV that says, if you buy a car, we're going to help you with your credit. We're going to report it, and it's going to help your score. Well, it gives you a score if you have 0 score, but it doesn't ever give you a good score. It just gives you a score. The things that are reported on your credit report are not equal. An installment loan, if you were to come in and say, I have a $70,000 truck and I have $70,000 in my bank account, I can pay off my truck today. What will that do for my score? Without even running the simulation, this much.
Wow.
It does not improve your score at all to pay it off early. People always think, I'm going to have good credit because I pay off all my accounts early. It doesn't help your score at all. You could have a $300 Capital One card that you owe $200 on. And if you were to pay it down to $7, that's not an arbitrary number, we'll discuss that. Your score will likely increase about 46 points instantly.
Can you repeat that?
About 15% utilization rate,
It's
right?
actually,
30%?
so the old numbers prior to 2008 was 30% of your credit card should be used. That was day in and day out, that was okay. Keep in mind who it is that, I'm gonna get back to your question, I did get that.
Appreciate that. I'm trying to raise my score.
Keep in mind, I will also give all of you guys, I will give you guys my phone numbers if you want to call me on your personal information only. Any of your customers, only go through Ben.
Yeah.
I'm a back office. I don't do credit repair. I'm not working for customers. We're working to help loans go through, and they only Ben has access to me for that. For your personal credit, if you have a question, you may call me and I will give you.
Thank you so
Actually, if
much.
you guys want to write it down or put it in your phone, my cell is 520-349-1240. And just know up front so that it's not uncomfortable for me, should you call and go, well, I want to know for my cousin, brother, uncle, borrower, just a real quick question, Ben.
Yeah.
But I will help you with your personal stuff because I know your personal stuff can be embarrassing to share with somebody that you actually know and work with. Most of us have been broke. Most of us have had bad credit at some time. Back in 2000, I had to file bankruptcy. My husband is a general contractor and we had 3 people file bankruptcy on us. And it was for a lot of money and we're a mom and pop shop. We went belly up, and as I sat there in my Chapter 13 bankruptcy and had to keep redoing our financials every month to send to the bankruptcy court, I went, I want my 800 credit scores back. And I have no idea what to do. Most people that are on what I will liken to a bad credit train, they would do anything to get off of it. And your customers want to work with somebody. If they want to work with somebody, we will absolutely show them what they can do and give them a plan, and yourselves included. This industry is like, whoo. So we all borrow from Peter to pay Paul, and then it catches up to you at some point. I get that. Credit is just a number. But where's the number come from? The credit bureaus, Experian, TransUnion, and Equifax. That is not your creditor, Capital One. Capital One says, I'm sorry, what's your name?
Jason.
Jason, here's a $300 credit card. Have a great time, max it out. You could spend all $300. They told you you could. But if you do, the credit bureaus look at it and go, no. Based off of historical data prior to 2008 said, if you stay under 30%, you're great. What happened in 2008? Y'all are too young. Everybody lost their homes. And they went, my credit's already crap. I'm just going to throw in all my credit cards too, and we're giving ourselves a do-over. So since the credit bureaus look at historical data and their entire job is to evaluate risk, you want to know what the new number is? 10%. So if you have a $2,000 credit card and you spend over $200, not only is your score not improving, even though you pay your credit card on time every stinking month, your scores actually start to go backwards. If you owe more than 10%. Why? Because the credit bureaus know that if you spend more than 10%, You are a default waiting to happen based off of historical data.
Hmm.
Does that make sense?
Yeah.
All they do is go risky, not risky.
Mhm.
What's not risky? A
Less
person
than
that pays their
10%.
credit on time, that's what you think is you pay it on time. 65% of your credit score has nothing to do with the date you pay your credit cards or the date you pay any of your accounts. You can have them all paid on time, everything that is shown there. There's a mixture that's required. They like to see, how do you use this type of credit? How do you use this type of credit? And do you overuse it? The one type of account that has more effect on your credit score than anything else, and it's the area we work in constantly, is your credit card balances. I said $7 on your credit card, and I said it's not an arbitrary number. It does not. This falls under not logical. If you use 0 on any of your credit cards, you're all paid down to 0. That's being financially smart. But if you do that, the credit bureaus, let's say Experian, TransUnion, Equifax, you pull somebody's credit to grant them credit. That's basically a, hey, how are they using credit today? And how are they managing their financial obligations? Well, as they are looking at it, they're going, I don't know. She's not using any credit. I don't. Do you know? No. They're not reporting anything. Do you? No. Lower score, they must be risky because we really don't know how they're handling credit. Okay, that's just a picture word to help you understand what's going on. So should you pay all of your credit cards to 0?
No.
Your score, if you do, will be between 15 and 20 points lower than if you have between $1 and $7. Now, if you have a $20,000 credit card, $7 is not even close to 10%. What are you talking about? Magic number. We run simulations that are accurate within 2 points high or 2 points low. So we can go in and we can say, have you guys seen like on CreditWise and Credit Karma, you can run simulations. Ours are really accurate, okay? If you go in and you run them, it will tell you within 2 points. So if Ben says, I need a 620 for an FHA loan, my unspoken instruction is I need a 622. So that should it come in 2 points low, I'm still gonna be good, okay? So as we look at it, we can go in and we can play and say, what if he paid his Capital One card down to $30? What would it do? What if he paid it to $25? What would it do? $7 is our sweet spot. Okay, but between 1 and 7, it will score exactly the same. So if you don't want to share your credit story with anybody, pay all your credit cards to 0 except for 1. And every single month you must use a credit card between $1 and $7, and you will have the best score you can ever have at that point in time. And if you continue to use it that way over a period of time, at first the credit bureaus go, really, was that a fluke? Did they really know what they were doing? And so it kind of sits on it. And then there's something that happens at about 6 months that their scores really go up. And at a year, sometimes we'll see like 150-point difference when you have consistently used it. Why? Remember I said you need to reestablish credit? A year's time is considered reestablishing credit. So for a year's time, you've not been late on a mortgage, or not a mortgage, sorry, you've not been late on any account. Any account. Late defined by the credit bureaus is once you hit more than 29 days late. So don't get discouraged if you can't pay your mortgage on the 1st. You didn't just kill your credit. It's a bad practice to plan on that 29-day window, but it is there. If you have to borrow from Peter to pay Paul, just know it doesn't report to the credit bureaus until you hit 29 days late.
You still might have a late fee though.
Yeah, you will. So we're talking creditor.
Yeah.
The creditor knows you were late, but they can't report it to the credit bureaus until you hit 29 days late. Can they charge you a fee?
But
Can the credit card companies charge you an over the limit fee and a late fee that puts you even more over the limit and hurt your credit even more? They can, because you truly were late per their guidelines. So their guideline says once you hit 15 days late, we're going to charge you a fee of X number of dollars. And if you end up going into default on it, we're going to raise your interest rate to an astronomical amount. Do you know what credit card interest rate average? I think it may be, the last time I looked at it, it was 24. In my world, our average interest rate, 29% because of bad credit. When you're paying that kind of money, you guys all get statements on your credit cards that say, if you pay the minimum payment, it's gonna take you this long.
Mm-hmm.
Let's do the math on that. A $300 credit card. First off, somebody with a calculator, what's 12 times 21 years? I think it's 255, but I'm sucky at math, even though I deal in it all day.
252.
Yep.
252 times $25, because that's the minimum credit card payment ever.
You're definitely the expert with the calculator. We're just not-
$6,300. Anybody want to pay me $6,300? I'll loan you $300 today. That's why the credit card companies make bank and why they do what they do. Now, is it the evil credit card company that does that? No.
They just
They
give you the
disclose this
ability.
much. They give, well, shoot, if you give me $6,300, I'll give you 300 too. I'll give you the ability. That's not bad business. That's not crooked. I fully disclosed what it was going to cost you.
Mhm,
And you said, okay.
It's a lack of self-discipline
mhm.
Mm-hmm. because everybody thinks best case scenario. I'm going to get it paid off next month.
Mhm.
I can tell you from looking at thousands of credit reports that does not happen.
Mhm.
The only way to get out of credit card debt and actually improve your credit story, gotta bite the bullet, you gotta pay it. You need to lump sum it. Hey, there's a stimulus coming up, guys. There's maybe a tax return. You may owe a boatload of taxes. I don't know.
Yeah.
I usually do. But yes, sir.
But if you lump sum it, if it's already in collections, does that count too?
If it's already in collections, my advice to my borrowers, if you settle that collection or charge off, they will usually settle it for 50 cents on the dollar. And when you do, it will report and give you the very same score as if you paid it in full. Now, it does say settled on your credit report. So an underwriter looks at it and says, well, they didn't totally pay it off.
Mhm.
So if you wanted to be like totally self-righteous about it, you could do that. Your score is going to be the same, and it is not going to stop an underwriter, because an underwriter's job is to protect the assets of the company that they underwrite for. And so they're looking at risk. Did you pay it as agreed? No. Did you go back and take care of it?
Mhm.
Yes.
Mhm.
And that actually scores a lot of kudos. Now, we did discuss that paying off a collection can hurt your score.
Mhm.
I don't really see that paying off credit cards hurts your score as a collection. Usually it has a good effect, but not always. So if you're ever thinking about paying off a collection, let me run a simulation. It takes me 2 minutes and I can tell you. I run it across all 3 bureaus to see what it's going to do, because we always throw out the highest score,
Mhm.
we throw out the lowest score, and we use the mid score to be conservative but fair.
Mhm.
Okay, every lender does that. It's mandated by law, by our government, that that's how you have to read the credit scores. So as you're looking at it, if we make sure that it helps your score in at least 2 bureaus, your mid score is going to be affected in there. And so we'll run through and we'll run simulations. We'll say, the first thing that we always do they have any revolving account showing? That would be a credit card. If you do, are you using it correctly? Okay. On your right-hand side, we're not going to cover all of these because there's just too many. But on the right-hand side, you've got your credit examples. And this shows, what's the first one that you have is zero credit. So your kid comes to me, your 16-year-old ends up turning 18, they're ready for credit. And you're trying to be a good mom or dad and say, this is what you need to do. This is what my daughter just did. This is not her specific example. But you've got 2 different examples in here. One says zero credit revolving versus installment submission. This submission form is what Ben would send to our credit department to let us know this is the type of loan they're looking at going into. This is how much money they have to work with. They don't pay us a penny. Our services are completely free to borrowers that are our borrowers, potential borrowers for Sunstreet Mortgage. But we do ask for assets because we want to know how much money do they have that they can work with on reducing debt to improve their credit. It is not like you're talking to a used car salesman and you never want to give them the facts, because our instructions are what is the fastest and least expensive plan that we can come up with in order to get their credit where it needs to be. So in this particular case, the loan officer asked for a 640 score. And then at the bottom on the notes, it says the borrower has 0 credit history, hoping to get a P2P loan. This was a blast from the past. May not run even after we have a score due to limited history. Backup plan is probably FHA, super nice and sounds motivated. These are all real life things that we received. So then the next thing that we have is, here's a copy of their real credit report. 100% of anything that could be identifying has been removed from it. But you'll notice across the top where it says Experian, TransUnion, and Equifax, there's nothing written. That means this person had 0 scores and there was nothing there. So when we got it, go ahead and skip to the next. You're gonna see that you have 2 different things. One says a credit card scenario and one says a revolving or a installment loan scenario. You will notice we're gonna start with the credit card scenario. In the upper left-hand side, it's after your credit report. There's a separate attachment there. And it says 7 months. Okay, so there is a 7-month window of time that their scores are going to report NA, 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 and month number 7, they're going to have a score. Why? The credit bureaus want to see something report for at least 6 months. So 6 reporting cycles, and the next month they're going to have a score. Now you can go to Credit Karma and you will see your score is growing, but a mortgage report, you cannot have a score until you've reported something for a total of 6 months. And then during the 7th month, we can repool. So in this particular case, we asked them to get a $200 credit card and a starting balance of our magic number, $7. So our instruction to our borrower would be, go to Open Sky, CC, if you guys want to write that down, .com.
Was it Open Sky, you said?
Open Sky, CC,
That's how I did it.
good, .com. Did Ben tell you that?
No, I knew it before that.
Okay.
Because another client told me about it.
Okay,
So it's called OpenSkyCC.com.
yeah, like short for credit card, OpenSkyCC.com. There you apply for a secured $200 credit card. Now, I work in credit. I hate credit card debt. I hate any type of debt. I'm a get out of debt person. Every one of our employees are required to go through Dave Ramsey, the entire Financial Peace University, so that we can talk finances with our borrowers and be educated on it. We do believe in debt free. Separate from Dave Ramsey, we do believe that credit scores matter. You need credit. It's a real life thing. Do you need credit card debt? No. If this person pays off his $7 every single month, you know how much interest he will pay this credit card company? 0, because it's paid in full every month. You wait for it to clear the bank, and then you go out and you borrow up to $7 again the next month. You can take your card, it's secured, yes. You put it in a gas pump. The reason we do this secured is because most of our customers can't qualify for a credit card because they burned every credit card company out there.
I'm kind of confused because you keep mentioning $7, but you're saying if you hypothetically you get $100, and you're saying always leave a balance of $7 or just spend $7?
Pay it in full each and every month, and then wait for your payment to clear the bank, and then go back out and use up to $7. A great place to do it.
$7 or more.
$7 or less, between $1 and $7
okay,
every single month.
So in other
I'm
words,
glad
you
you're
buy
asking
some
the
chips.
question because I'm seeing people go,
Yeah.
Okay, because you said 10% earlier.
Yeah.
10% of
10% is the rule that the credit card or credit bureaus will tell you if you pay or that you can use
She
up to
found the
10%.
gray, she found the
That's
gray.
sweet spot.
The best
Okay.
sweet spot out there is $7.
So you buy some chips and soda once a month on that particular card.
Correct.
No, you put gas in the car for
Or you
$7.
can put gas in it. Either way.
I like to chip the soda.
We're trying to improve our lives here, Jason.
Whatever you would normally buy.
Okay.
So I don't recommend, ladies, don't go get a Victoria's Secrets card.
Or a bra.
You're gonna spend $70 on the thing, you know? It doesn't matter. Fingercut is another company that doesn't require you,
Unless you find a $7 bra.
unless you can find a $7 bra, but I don't recommend you wear one. Just saying.
Thank you.
Not a bra, a $7 one. Sorry, everybody online, we digressed. So looking at it, you want to use your card, something you would buy anyway. Don't go get a Fingercut card where you're gonna buy crap and spend way too much for it. That's probably a better example than Victoria's Secret. Your Open Sky account says, okay, if you give me $200, I'm going to draft it from your account tonight, and then I'm going to put it over on deposit for you.
Right.
When you have paid your card as agreed and you close out this account, we will give you back your $200. So it's not a case of you're doing like a prepaid card. You actually are given a real credit card. Nobody's gonna know it's a secured one when you go use it. We tell people gas because you can cut it off at exactly $7. Your chips and soda, if it's $7, don't buy them. But you're between that 1 and 7, so it's good.
Yeah, okay.
That totally works. We know people that will go to Starbucks once a month on their credit card, and they set it up on bill pay to where it gets paid in full each and every month. However, bill pay isn't always foolproof. Things fall out. So you still have to manage your accounts. But then if you forget it by a day or two, you don't have to stress. You can go, oh, bill pay had it covered, but I'm going to check and make sure it got paid. And if it got paid, then we're good. And then I can use it again in a couple of days. Does that all make sense to you guys?
Yeah.
When you said-
I'm sorry.
No, go ahead.
If I have three credit cards and I have two paid down to 0 and one has a balance, like within that 10%, that's okay? Or they all have to be at?
Depends. No, only one.
Okay,
So all of them at 0 except for the card.
The Blue Sky.
And forget the 10% that the credit bureau's telling you, because I'm telling you between $1 and $7.
okay.
Do you know that if you get a $200 credit card, your score will be X? If that card was a $20,000 credit card, you're gonna have exactly the same score.
So $7 no matter what your balance is?
Yes. I'm telling you, don't use your credit cards as credit cards.
Okay,
Use them as a way to establish a credit score. You know how you have those customers that are like, oh, 100 credit score.
No.
It's just bragging rights, okay? In the real world, anything above a 720,
It's the same.
you don't get any more attaboys. Now, for mortgage insurance, up to 740. So there is an instance where you might get an attaboy. Anything over 700, any creditor that pulls your credit is going, you got good credit. So if you're falsely humble and you go, oh, I don't have good credit, we're all going, I wish mine were there. Yes, sir.
So with that Blue Sky, Open
Open
Sky,
Mhm.
that's one. Is it smart or not smart to get maybe 2 or 3 and do the
So
exact
I'm
same
with
thing?
him. I was asking the same
In
thing.
running the simulations, it does not give you any higher score to have a second card anymore.
Okay.
If you get too many cards, you become a credit risk.
So
Okay,
just one Blue Sky.
One open
one,
sky.
Open Sky.
It's funny
then
though,
what
they send you an email.
Oh, yeah.
And you say, oh, your credit's improved, you want another one?
Yeah.
I've done that.
Oh, wow.
So just say no.
And they will say, do you want increases?
Secured card though.
Yes,
Because you said it, until they close it, that they get their deposit back, does Open Sky at all convert from a secured to an unsecured line, or they have to close?
Open Sky is only a company set up to help people build their credit.
Okay,
and
the
that
reason
is
I
why
ask
we use
because if they close the product, they're gonna lose some of their credit age. When they
This-
close it, will they not?
Yes, you will. And we factor that in when we're looking at it.
Okay.
You're only, this is how we instruct our borrowers. You've gone and you've gotten an Open Sky account because you were struggling getting another account. So you set it up. We will then take and put a sticker all down the side of here that says immediately 1 month, 2 months, 3 months, 4 months, all the way through 2 years. And it will tell us at any point in time where your scores are good. Once we get you to the point where you are able to go to loan, you have more than a 640 credit score, if that's where we were at that point, after your loan is closed, and you don't need any new credit for just a little bit, go out and apply for a Capital One card. And a Capital One card has so many different varieties that you can apply for that it really would even fit you. If you're not looking for mortgages right now to where you need a 620 instantly, You could go and apply for a Capital One card. They're going to pull your credit. So anytime a credit score or a credit inquiry hits your credit report, it's between 4 and 8 points that your score will drop. Okay? So you don't want to go apply for somebody while we're trying to get your score up to have a drop happen with getting your, to get a card. Open Sky doesn't pull your credit. So there isn't any inquiry. They just go, I know I've got his $200. We're not gonna let him use more than $200. So if he decides to walk away and never pay it, we're gonna keep his deposit.
Yeah.
We're still going after him for the interest. So you're still gonna get a collection, but they know that they don't really have any risk. So that's why they will give you a card without a credit inquiry. Capital One is not set up that way. So they're gonna inquire into your credit. However, they only charge $49 for a $200 credit card for your deposit. They don't ever give it back, but your upfront outlay is only $49. So if you're just doing general knowledge, you know, a year from now, you need to have your credit score, then that actually works, okay? When you look at this other scenario, if you go to any credit union in town, any credit union is gonna tell you, you need an installment loan to fix your credit. I sat in one of the credit unions for about 3 hours one day, and I was so angry by the time I left. Come on in. What's that?
Is there a seat?
There's a seat right there. I was so angry because I listened to their loan officers give $1,000 installment loan, $1,000 installment loan, $1,000 installment loan. And you need to take the highest amount that you possibly can, and you need to use it, and you need to keep it out there for a year so that your scores are good. I went back to my office and I ran this scenario, and I walked back into the office and I said, I need to talk to your manager. Would you rather in 7 months have a 741 credit score, or would you rather in 7 months have a 651 credit score? This cost them $200. This, they spent well over $200 just in interest that they required them to keep it out there for a year. Were they trying to rip off the customer? No. They don't have the tools that we have available to us. I ended up talking to the person saying, you need somebody that understands credit, and I will teach them, because people are coming in saying, how do I get credit? And I will teach your loan officers to do what we do so that you can better help people. There are so many people that need help. Now, at the end of the day, the next one is their final score, their final credit card. This is the very same person, and they ended up with something between the two. You will notice the original date was 7/26/18. They didn't actually get their $200 credit card and get it seasoned by 7 months until 1/23/20, at which time, if you look inside, they actually had an installment loan and a credit card. So they owed $316 on an installment loan, and they owed $0 on their Capital One bank. Now, did we tell them $0 or did we tell them $7? Yep. So these guys didn't follow what we did in the time frame that we told them to do it, but we eventually got them to loan with a 732 credit score. Okay. All of the other scenarios behind there are basically the same type of scenarios. It starts off with, here's the original report. Here's our original request and what the loan officer asked for. This person actually had almost $10,000 to work with. When we finally talked to them, we asked for $200 for a secured credit card. We're not going to take every dollar because we want to leave as much money in their bank account as possible so that they look strong when they go to loan. When you get your score where it needs to be, you have gotten your mortgage closed, then go out and apply for an actual credit card while you still have the other one open, and then close it out.
So you do credit education versus credit repair.
Yes. The reason we're so successful, we contact your customers a lot.
Okay.
By the time they're done, in all honesty, usually they don't remember who their loan officer is. So we have to keep saying, Ben's a great loan officer. Talk to Ben, talk to Ben. You know, everything loan, we don't discuss it. Even though I train my staff to know how to be a loan officer, we don't do loans.
Yeah.
We don't do real estate. We're not going to tell them how to work with you.
Yeah.
Imagine if 42% of the customers that would have been declined actually can go to loan, what it would do to your bottom line next year, how many additional deals you can have. Ben's gone, Nick's gone, I can say it because I'm not a loan officer. I get all of the steering rules. I know you're not supposed to steer. If I were sitting in your shoes, I would be going, here's a couple of different lenders' credit or business cards.
Yeah.
I personally have worked with this guy a lot. It's where I would send my kid. You're not telling them they have to go there.
Yeah, yeah.
But why on earth would you send them to somebody else if we can get you that much more business? Day in and day out. $96 million for Sunstreet. We're not that big. That's a big additional amount of loans that we got. In addition to that, a lot of realtors use us or use their loan officer strictly because we have the credit department. You got a lot more people. If your people are willing to come in, I don't think there is ever anybody that we've said we cannot help. Now, we do have some criteria there. Generally speaking, we're looking for a person that has at least a 560 credit score because our minimum guideline is a 620. However, if the reason that they don't have a score is because they don't have any accounts open, I don't care what score you have. If the bad credit that is showing on their credit report is older than a couple of years, I can still work with that because they have reestablished. I can get them a card that gets them a score and they've got 2 years that they've kept their nose clean. Their scores are going to move really, really quickly. The only reason that we have the other criteria is because facts say that a person with more than a year-long plan, only 3% will ever complete it. We're not charging your customer a dime. That's a lot of payroll because we do a lot of hand-holding. And so in that instance where it's a person that's like, I'm not going to be able to get this person within a year, we actually create an email. It looks like Ben created the email and it says, hey guys, I told you I was going to submit you to the credit department, and I did. We actually wrote it, but he's going to sign it and he's going to send it. And it says, unfortunately, there wasn't a plan that we could come up with that would help you within a year, which is our criteria. However, if you go to www.icc.com and you open a $200 credit card and you use and pay, and it's all spelled out really clearly every single month, and you have no new collections show up, you have no new credit inquiries show up, no new accounts opened at all within the next year, come back to us in a year and we should be able to firm up a very fast plan for you because they're already doing what's going to take time to reestablish the credit. So even those people, we're not just going bad news. If a person is willing to do their part, it is not a matter of if they can qualify, it's a matter of how soon they can qualify. And people tell us all the time, my credit's crap, you're not going to be able to help me. And I call them, think of your credit report as a storybook. It tells the underwriter how likely you are to pay your credit on time based on how you paid it in the past. We kind of said that earlier. If we can change the page instead of having to reinvent history, we're going to just change the page. So we're not going to tell your borrower, you need to go pay off your $20,000 of collections. They're old. It's not even hurting your score anymore. After a couple of years, it really doesn't make a difference. And if an underwriter is able to overlook them, we're going to be good. The only time that collections or charge-offs become problematic to us is if they're huge. And it's not because it affects the score. It's because they're likely to become a judgment. Do you guys all understand what a judgment is? There's a normal cycle. You start off with, you got a collection at Capital One. After a certain amount of time, the IRS says, hey, Capital One, you need to send them a 1099 saying that this debt is forgiven so that we can charge them taxes on it as if it's income to them. Is Capital One giving up on collecting that money? No. They're going to then sell it off to a collection company. And the collection company is going to get certain, they say, if I can collect on this, I'll give you X number of cents on the dollar for anything that I can collect. Capital One says, well, a little bit's better than nothing. Okay. If the collection company cannot collect, now they don't have to sell it to a collection company. They can still continue to try to collect it themselves. At any point, either the collection company or the original creditor can turn it into a courthouse. You get somebody knocking on your door saying you are being served, you need to appear in court at this date for Capital One.
Yeah, they were at my house last week.
Okay,
No, I'm just kidding.
it happens. I'm like, well, you're pretty free with that, but
2
okay.
months ago. They stopped knocking on the door is what happened.
Okay, so if you don't show up in court, you are automatically given a judgment. That judgment never shows on your credit report, so I don't know it's there. But it does show in public record. So when title tries to prepare their title work, you get that nice exception on your title report that says, we will insure this house, but we will not insure this debt.
Whoa.
So can you have a loan? Nope.
Mm.
And that's why judgments matter. It's not because it affects your credit score, because it never shows on your credit score, but it does affect your lendability.
How do you fix that?
You pay it. Now, can you also offer to settle it? Yes.
Okay.
You can ask if you can go into payment arrangements. Yes. If they didn't actually serve you and you can prove that, but what they do, just so you know, when they knock on your door, they say, I talked to this woman, she looks about this old, this is what she looked like, and they go, sure you weren't served.
Yeah.
You signed the paper, you know,
Yeah.
and so
Mine
they know.
says my name and spouse.
Yeah.
It's okay.
You have to deal with it. Those don't go away. And it used to be that we could get judgments off after 5 years that had elapsed. The new rule is 10. And on a judgment, you can renew it into perpetuity. They go, well, at some point, she's going to want a house.
Yeah.
And she's not going to be able to get one. So we're going to get our money at some point. But you know what it does? It continues to grow and earn interest. You're not getting out of nothing. You have to pay it. And so you take care of what is owed. That's kind of sucky. We all like the fast fixes. But if they have, you're good. If they have elapsed and, you know, the 2 years has gone by, they have up to 5 years to give you a judgment. They stay, the collection or derogatory that's shown on your credit, any derogatory disappears after 7 years. So eventually they lose the impact on the scores, and then eventually they do go away. On the other side of your packet, there's a couple of other things that we do go through with your borrowers, and I'm going to cover them very quickly. The flag one, disregard. Let's go to the monthly budget. We go over this budget with all of your borrowers that have any interest in finances at all. One thing that we found out is you can't have good credit unless you handle your finances. And you have, it's this one, and it's on the left-hand side of your packet. You cannot, everybody online, we're going to give you these. I'm going to email a copy of them electronically to the front desk person, and you can get them from her if you would like. Your budget, this is one that we created. It is the best budget that I've ever come up with because it includes everything that you're going to spend money on. We actually do have this in an electronic format that she will have, okay? So you go through and you enter your income at the top. If you have 2 incomes in your household, you would enter both incomes. And then you start out, and they're broken down by category that I got to put on glasses to read. So first is your housing payment, whether it's rent or mortgage, you would enter it, followed by utilities, your TV, cable, internet, maintenance. You're going to have to maintenance your house. You might as well put some money in there for repairs that are going to happen. And household supplies. If you want to successfully handle your finances and stay in good credit, you have to budget it. So you go, I don't have a clue how much I spend in repairs. Do you have last month's bank statement still, or last year's bank statements available to you? Go through them, figure out what you did, divide that number by 12, and you enter that into a monthly amount so that you're planning on you're going to have those expenses. Next, you come to insurances. We have renters or homeowners, your vehicle, health, life, anything that is there. And the income, by the way, that you use is your net. Okay? So if your insurance is taken out of your paycheck already for health insurance, you don't need to add it a second time because you're using your net income. Your transportation, any vehicles, any Ubers, taxi, Lyft, bus, anything you do, licensing for your vehicle, fuel for your vehicle, and maintenance. Maintenance includes tires, batteries. How much are you going to spend a year? Divide by 12. And that way you're actually including it in there. Food is the category that breaks budgets.
Yeah.
Isn't that silly?
Much.
If you go through, I'm gonna recommend, if you guys decide you want to do this budget, look at your last 2 months' bank statements on this category. Because you go to the grocery store to spend $20 and you walk out with $80 or $100 or $200. Okay, this is, you've got groceries. You also have dining out. That will shock you how much you spend dining out. You have fast food. So that's you're going through for lunches or whatever. Well, maybe you do fast food for dinner too. I don't know. Starbucks, convenience stores. I had a customer actually in Ben's office. I had sat down and we had gone through a budget with one of his customers. And the guy was like, it's her fault. It's her fault. It's her fault. And the girl was saying, it's his fault. It's his fault. It's his fault. And he goes, I'm not the one that spends $7 a day at Starbucks. I buy my coffee at Circle K. And I'm like, well, you're kind of a jerk, but I didn't say it. Instead, I said, well, when you go there, how many times do you go during the day? And how many times a day do you go to Starbucks? While you're at Circle K, how much do you spend on donuts or chips or whatever while you're there? He actually spent more than her, but he was blaming her for breaking the budget because he went to Circle K. And so sometimes you just got to be real with yourself. If you're with a partner, whether you're married or whatever, if your finances are commingled, you really need to do this together. You need to grant yourself a moment of grace. And your partner. I can tell you that in every single household that I've ever worked with, there's a spender and a saver. The saver is undoubtedly the person that also pays the bills and gets totally frustrated. So for that reason, I'm going to give you a very quick story on my husband and I. I'm not the saver, but I'm not the spender either. Okay, my husband is a toyaholic. He's an outdoors guy. He loves to hunt. He loves to fish. He loves to camp. So we have the tent trailer. We have the fifth wheel. We have the RV. We have the boat. We also have, for the little lakes that he can't take the boat on, a little canoe. I have no idea how many guns he has. He's not part of any militias. He just likes them, and it's what he spends his money on. And for years, I have said, I work to provide my husband toys. Okay? He thinks, and when we sat down to do this, I was shocked to find out he thinks because I don't pass, well, I do now. But at the time when we were doing this, I did not pass a convenience store or a drive-through if I didn't have a drink and something to eat in the car with me. I blew money. But I blew money at $3 or $4 a day. Okay, he buys the best of the best in whatever he's buying. So we're talking thousands of dollars. In my mind, he was the reason we didn't have more in savings. In his mind, I was the reason we didn't have more in savings. And that totally shocked me. Even after I teach this crap to people all day long, I teach it to my customers. My customers sit there and they fling elbows. Listen, and I get it. People spend money differently. I can completely justify my spending. Well, at least I'm not spending thousands of dollars a day and I work hard for my money. If I want a soda, I'm going to stop and buy myself a soda. My husband can justify he's buying investments.
Yeah, and you're safe.
True.
He's going to sell them off. Never.
Apocalypse is going to happen. You're safe.
Yeah.
So now we're stocking up on ammo because that's going to be the new currency, right?
Right.
Silliness. But you can always justify your own behavior, and it is very easy to point the finger at somebody else. You will never fix this, and you will never get on track unless you can sit down with that other person and say, okay, tonight, all of those hidden debts that I have are out on the table, and we're going to take care of them because we care about our future. I've had guys in my office that if the girl gets up to go to the restroom, about the other house that's on our credit report. You dog, it's not my place, but there are those things in surprising number of homes. Deal with them, be an adult, do the hard thing, and let's move on. So food is a biggie. An emergency fund so that you don't have to hit your credit cards. You should have at least $1,000 out there. Loans, any type of loans that you have. While we're passing the student loan category, a lot of people are talking about they're in forbearance. They're likely to be forgiven. Keep paying them.
Mhm.
You're earning interest. This is a 30-year amortized loan that just continues to grow and grow and grow.
It never
If they're ever
expires.
forgiven, great. No, they're not forgiven unless you're 100% disabled vet. And it's very hard to prove that. So when you look at it, everything's there. You've got other legal fees, debt reduction. Under personal care, you've got your medical, your hair, your nails, your clothing, your prescription supplements, a massage, a health club, organization dues, fees, pets. Under charity, under gifts and donations, you've got charitable contributions, birthdays. How many of you guys budget for birthdays? Nobody. How many of you guys buy birthday gifts every year? Everybody. Go through and make yourself a list. Okay, stop and think. How many birthday parties do your kids go? Because your kids can't go to a birthday party without at least $20, right?
Yeah.
Okay, so
that's the
$20 for each of them,
budget.
that's the cost of going to
Yeah.
a birthday party. How many people in your immediate family are you gonna buy gifts for? Do you buy them for your parents, your grandparents, your uncles, your aunts, your cousins, your nieces, your nephews?
I agree stand with my presence.
Okay, that's a good plan. You'll save a lot of money doing that. You must be really great at birthday parties. Christmas, how many of you guys buy Christmas gifts? How much do you spend each year for Christmas?
Too much.
Divide that number by 12. You're gonna put away 1/12 every single month, so that when you get there, it doesn't break the bank in December.
And then you see the bill in January if you're charging it.
But you're not gonna charge it, because you've heard, don't use your credit cards other than $7. So you need to start budgeting now so that you don't have that pain next January, February. Anniversaries, Valentine's Day, fundraisers. Don't you love those? You buy cookie dough for $25, it sits in your freezer until it's freezer burned and you throw it away. But you gotta do it because, you know, that other person buys them from your kids when they come around. And so this is just called life, guys. I literally added everything that I can think of that we spend money on. It doesn't matter what your hobby is. It doesn't matter what you spend money on. Put down what you really think you do and is acceptable. You're gonna fill out a second time a little more realistic when you get to the bottom and you find out that you're negative. That explains why you have to pay the credit cards all the time, why you're always having to use them to live. This is not a killer of everything fun.
Mhm.
It's an enabler for everything fun. You just have to count on it. Because otherwise we do this. Dang, I had 3 closings this month. I was only counting on 2. So I've got an extra X number of dollars that I can spend.
Mm-mm.
Well, then what happens on the month when you only get 1 closing and you expected 2? It is so much more important for you guys to put yourself on a budget as a real estate agent that's commissioned, because you have no control. You don't just get a paycheck every 2 weeks, I'm assuming.
Yeah, yeah.
Okay, so look at it. You can do anything you want to do in your budget. There's not a good spending and a bad spending. You need to start getting out of credit card debt. First thing. Why on earth would you pay somebody $6,300 for a $300 credit card? So if you want to figure out what you're actually going to pay, if you don't just bite the bullet and pay it off, go to your credit report, figure out what all of your monthly payments are in your credit report times, did we say 252? That's what you would pay in the 21 years it would take you to pay off your cards. So look at it. Okay, now you just gave yourself what? A 29% increase on all of those things that you're paying that you can use to, okay, now let's start taking care of the car. Another thing that realtors tend to get trapped in is you got to drive a nice vehicle because you put people in your car. And so instead of just an okay vehicle, yes, sir?
No,
Okay. Instead of just an okay vehicle, you end up with going out and you put yourself into debt for the next 7 years. And this is the car that you absolutely have to have until next year's model comes out.
Mm.
And now it's a piece of crap. I need a new one, and I'm going to change it in, and I'm going to keep this cycle going over and over and over again. Nobody can handle your finances except for you. The same with your customers. And this is what we teach your customers. For that reason, there is something that's called a compare report. Anybody looking at doing a mortgage with a 620, or actually the numbers are less than a 640 score, are very likely to default on their loans. It is very risky. We do not have, and we did not change until the aggregators quit taking loans that were less than a 620 score. We have not had a single customer that has gone through our department that has defaulted on their mortgage.
Wow.
And the reason is if you know how to handle your finances, you know how to handle your credit. And you're not going to get yourself in a situation where you have to default. The average age for a person that is willing to actually start working on their credit is 45. Hey, at least they figured it out before they retired. But you know all those people you see standing at Walmart greeting people that are 70 years old or working at McDonald's that are 70 years old?
That's
They'll tell you it's because they need to get out of the house and they need some interaction. And to a degree, that's probably true. Until you see them trying to walk and everything hurts. You want to be that person? You're the only person that can make a difference there. And that's what we teach our borrowers. We also do talk about, there's a packet in there on the left side called the Rule of 72. I don't know what time we're supposed to be done, but I'm sure it's by now, so I'm going to stop. The Rule of 72 is Einstein's theory on compounding interest. And it's what will make or break your retirement. I don't want a show of hands, but think. Do you have money sitting in a savings account earning nothing? Or 1%, 2%, or 3%? Dumb plan. I don't know who said yeah. So I'm not calling any certain person dumb. You need to learn to invest your money. Walking through to every one of you guys, go through the Rule of 72 packet. We put little yellow blurbs explaining what it all is. I think it is spelled out really well. The basic thing is whatever interest rate you're going to earn. We're going to call it 10% real quick, just so that you guys know what I'm talking about. Whatever interest rate you're going to earn, divide that into the number 72. That's how long it will take for your money to double. So every 7.2 years, if you're earning 10% on your money will double. So let's start with, in my scenario, I think it's $1,000. In 7.2 years, it'd be 2,000. In another 7.2 years, it'd be 4,000, and then 8,000. The whole amount doubles every 7.2 years. So at the end of that time, when you have more money, the longer you have, it's really great. But I have scenarios in there at 10%. I have scenarios at 15%. I have scenarios at 20%. And we have scenarios for if you're old like me and you're just getting started. The amount of money, if you're an 18-year-old and you invest $1,000 and you leave it there until 63, you'll have well over $1 million. For a single $1,000 investment, you never add another penny. For me to end up with $1 million, I'd be putting in $500,000 to have $1 million. Time matters, but interest rate matters, because if you're doing 15% instead of 7.2 years, it only take you I don't totally remember. So you have that many more times to double your money in the same time frame. Interest rate matters, time matters. You got to be purposeful when you're looking at your retirement, because you want to be the 70-year-old at Walmart or whatever. How many people do you see have to sell their homes because they can't afford them anymore? It's sad. It takes some pre-planning, but we can all do it. You just have to have somebody. On my wall at my office, there's a sign that I had put on there, and it's like huge. And it says, a goal without a written plan is nothing more than a dream. Do you want to dream of good credit? Do you want to dream of a good retirement? You guys are making bank in real estate right now. You guys could so totally affect your future with commissions. If you go, I'm going to live off of this much, and then anything extra is going away. You invest it. Charles Schwab last year, 46% on their money. I'm not touting Charles Schwab. You can invest it anywhere and almost get that in the stock market. Is the stock market a guarantee? No. Can you maybe lose part of it? Yeah. Would you have lost it all anyway if you never started investing? Yep. We would have spent it all at Pizza Hut or wherever. The risk is greater. No. Looking at people's bank accounts, the risk is greater if you don't invest it. You're just going to blow it all.
Yeah.
And so
pay like 0.01%.
Yeah. So you look at the stock market. Okay, so maybe you earned 46% this month and you earned X number of dollars and you lost a few of those dollars. Do you still have your original investment?
Yeah.
So you really haven't lost anything, right? You've lost money that you were banking on being there from your growth, but you didn't lose. Whereas if you never stop and be purposeful, does your company do 401ks? No? Okay. You can do a 401k without being part of a company. You can do an IRA without being part of a company. You find a professional to help you with that. We don't refer anybody, but my daughter that is 21 years old, she has averaged over, her husband was older. They have averaged over the last 5 years, 51% on their money. These numbers are only good as far as calculating the rule of 72. It's only good up to about 20%. And then it starts getting a little wonky at the end. So at the end of the numbers, you could mentally double that number again, but what you're showing there is actual compounding calculator numbers that are shown. The credit bureaus understand the rule of 72. The credit bureaus understand that you're going to spend $6,300 on that $300 credit card. And that is why they look at it and go, that's not sustainable debt as you continue to do that. So that's the end of our talk today. You've got my numbers. Call me if you have anything personally that you want to talk about.
Yeah.
And
What was it? It was 349-1240.
that is my cell number.
Okay.
Okay, and my name is Ellen Cooper.
Quick question, Ellie, does paying your car note raise your, like monthly, on time every year, does that do anything?
Yes. So it is calculated into your algorithm that you will pay your installment loans on time. You don't get any attaboys for doing it.
Yeah,
You get negatives if you don't pay it on time.
yeah.
And that will hurt your score a lot. A person with a 700 score that gets one late, their score will drop about 126 points.
One late?
One late. A person that has like a 640 score, it's already built in, your credit's crap. So it can't lower 126 points every time. It may hurt somebody with a 640 score, maybe 4 or 5 points. But a person with good credit, it really, really hurts whenever you miss a single payment.
But a person with bad credit, does it really help?
Yeah, over time, because over time you've reestablished your credit.
Okay.
If you continue the same bad credit behavior, your scores will never go up. You have to stop, and from here on out, I'm gonna do it right. And if you fall off the wagon, you get back on and you do it right again. Okay?
Thank you so much.
You're very welcome, guys.
We do have lunch.
Okay,
It's set up.
okay, there's lunch over there that's gonna be set up.
That's great.
Huh?
I'm liking you even more, now we got lunch.
I didn't do lunch, Ben did lunch.
Hey, I'm, it's all under you, so.
All right.
Does Ben have that budget sheet, like a Excel
You know, I
format?
know I sent it to him the last time, but your front desk person will have it in the Excel format.
Okay.
So it actually
So you just
populates
plug in the numbers
and it will automatically start adding and subtracting for you.
Alrighty.
Okay?
How do you
Thank you so
know
much.
what your income is if it's not a consistent number?
So for a underwriter, they would look at your income over the last couple of years and they would divide it by 24 months. Unless you have decrease in income, then they divide your last 3 years by 36 months. And if you do that, then it's a realistic expectation that you should get that, especially this next year should go up. So if you're calculating it based off of your last 2 years and you were working all of that time, take what you earned, you know, how much do you have to live? Maybe you start there and you work backwards. But a lot of people, what they think they have to have and what their needs versus wants, there's a big difference there. And so if you go, okay, for this period of time, I am really going to try to budget and try to bite the bullet and live simply for the next 6 months. Then I'm gonna treat myself with a weekend away with the sweetie and we're gonna have a good time, but we're still not gonna blow the bank to where you have something to look forward to. Maybe once a month you go, we're gonna go out and we're gonna have a budget meeting while we're out at dinner. And we're gonna discuss how did I do on our budget this month, where we at. That all works really good. Okay?
Yes, right.
All right. Well, I'm glad you enjoyed it.
Do you have a business card?
I don't because I'm back office only. I don't actually deal with the
Only for
public.
us.
Only for you. Guys, I'm gonna go ahead and turn you off here if I can figure out how to do it because everybody else is gone.
Yeah, I would just close
Okay.
it. Me too.
Goodbye. Thanks for coming.
There we go. That would be my resolve. Where do I find my judgments on? Do my credit report?
Go to Pima County Credit or Pima County
Or San Diego High School.
courthouse.
Go or like to a
You
dot
can, you
com?
can look at .com, it's paymentrecorder.com, I believe. And then you put in your name, first and last, and then it'll come up with everything that's ever been recorded against you, so don't enter judgment. So any houses you thought's gonna show and all that, but the judgment will show as a judgment. And then it'll tell you what you have out there, if you want.
Absolutely,
Okay,
yeah,
I'm so used to going through them, we can just do it while we're over the phone,
okay.
and you may get a moment of silence while I'm looking, but
Oh, please, oh, yeah, I'll take it.
we'll get it, and then I'll say, okay, this is what you need to do, and go from there.
Yeah.
Ignoring them doesn't do any good.
Well, I now it's just, it's crazy because my husband is the one that's financially responsible. No, I've been with him 20 years. He just takes care of his shit and just, but I get myself into my own situations too, which I think is, so I just need to start
And
solving
part of
that,
it is
but
we don't discuss with our husbands everything dumb that we do.
yeah, that too.
And we kind of hide things. It's called financially unfaithful.
Yes, I am
and-
financially unfaithful.
We do it, they do it. It's called life, and but you still got to do it.
Yeah, yeah.
And so you'll need to get yourself set up on a payment arrangement. Don't miss the payment.
Yeah.
But you can actually go to loan in 2 of the loan types if you have made at least 3 payments on a written payment agreement.
Okay,
And you don't have to make the payment arrangement with the courthouse, you make it with the credit union directly. Whoever
okay,
sued you.
okay, got it. Okay,
And
I can
that's
do
who you
that.
make all payments to, and you may talk to them and say, I had a closing this month, I've got $1,000 that I can
Yes.
put towards it, will you accept,
Yes.
how much is your judgments, do you know?
I think there's like 2 of them for 6,000 each.
Okay, you probably cannot get them to accept less than $3,000 on each of them, but how old are
Maybe 2 years.
they? Okay.
They were knocking on the door, maybe 6